Yeah, that begs the point, and I'll let the other panellists have a say, but isn't it true that, you know, sleuth work by the Wall Street Journal and the New York Times shows that, in fact, while Goldman has been saying we lost 90 million, so how could we possibly have had an economic incentive for it to fail, that in fact it shows that they took out insurance to cover those losses when it did start to go bad. So in fact they probably haven't lost anything at all.
That's possible, but investors can do that as well.
Okay, what was your take on this, Adam? Is it morally reprehensible, immoral behaviour, or is it just normal for a Wall Street bank?
I don't think you'd say it's a bastion of moral fortitude what Goldman's did. I think that what the second allegation that has sort of gone by the wayside a little, which is certainly the more pertinent one, was the allegation that Paulson was long, not short, and that's been raised by a number of different outlets, and that Fabulous Fab, the Goldman trader who sold this product, was allegedly telling investors that Paulson's long on this, Paulson's long, not short. I totally agree with Cynthia. ACA, who was the company that put together the portfolio and invested in the portfolio, they chose the assets as much as Paulson did. From memory, Paulson chose 170 different products and they whittled it down to 90, and so they had complete...
And were ACA and Goldman sort of, they owned this, they were putting together this product?
ACA was the advisor but also took an equity stake in the product.
Right.
So you can...
And then Goldman tried to sell their stake to ACA and ACA wouldn't buy it. I'm
not sure about that aspect, but you could probably compare it to, it's very easy looking at it with hindsight now, but let's say the Australian property market today, which is overly buoyant, and a lot of people think it's going to keep going up forever, property never falls. And if you were to do a synthetic CDO in Australia, and Steve Keen was on the other side of the transaction, and you thought about it now, most property investors who are buying this product go, oh, Steve Keen's an idiot. Steve Keen turned out to be right in 2 years, like Paulson. Suddenly Steve Keen's a genius and they wouldn't have invested in the product. It's the same analogy. At the time, ACA and it was, I think it was ABN AMRO who took the bulk of the debt and who lost the bulk of the money. RBS bought them. Thought property was going to go up. They didn't care who was on the other side of the transaction.
Right. Yeah, OK. Add anything to that?
Just following on, instead of taxing the banks in case they fail because they're too big, why not break them up beforehand so they're not too big to fail? I think it would be probably a more logical way to go. And obviously the reverse has happened, as we discussed before, Bankwest, CBA and St George are here. But in the US, there was all sorts of mergers, Bank of America and Merrill Lynch and
they were all too big
Morgan,
to fail,
JP Morgan and Bear Stearns. So they further concentrated the sector rather than split them up. And there has been talk of how do we split these massive banks up. Obviously the consolidation occurred when Glass-Steagall was overturned into the late 90s. Led by Phil Graham, who ironically received substantial donations from the financial sector. So rather than work out what happens when they fail, why not stop them failing? Probably a better solution.
Okay. The last bit of this puzzle, I guess, is that Justice Peter Jacobson in the Federal Court was considering it this morning, Friday morning, to give it the final tick of approval. He's now put that off till next Tuesday.
He has. He adjourned it till Tuesday to consider the new issues largely raised by Stephen regarding the governance concerns. Whether the court will be willing to overturn what the shareholders seem to want. If you have a look at the vote closely, there's two forms of approval you need in a scheme of arrangement. You need 75% of the votes cast, which is the normal hurdle that the people struggle to get over, but also 50% of shareholders by number. That's a way of protecting the smaller shareholders. And if you look, in the proxies, only 62% of the proxies supported the deal, which is an incredibly low rate of support. Obviously, 88% of shares in total supported the deal. So there's clearly a degree of anger from Seven's retail shareholders. On the flip side, you can argue those shareholders can simply sell their shares. No one's forcing them to hold them, and the share price has gone up since it was announced. So it couldn't, in a sense, be a temporary win-win. If the deal isn't successful, and there's certainly arguments that may not be, as Cynthia mentioned, the Caterpillar deal could be worth nothing in 90 days' time. That's the shareholders' own choice. They have the chance to sell the shares. They choose to believe the conglomerate story, and that's their decision.
Okay, we are suggesting that the asbestos issue is still plaguing these Australian companies, certainly James Hardie, but I think it's important to note that CSR acted in a very different manner than James Hardie with its asbestos victims. As you pointed out, I mean, they have been looking after compensation, they've been looking after victims. So it's interesting that the original decision said that they couldn't based on concerns about being able to pay future liabilities. But asbestos keeps rearing its head for these companies.
It seems to be very much a case of James Hardie being on the minds of the court.
Cruelling the lot for
exactly
everybody.
Right. They obviously, James Hardie made certain representations that they didn't come to fruition, and we all saw what happened after that. So that appears to be why the court took such an initial hard stance on CSR, and maybe it's unfair to sort of cast CSR in the same boat as James Hardie, because they have proven to be a somewhat better corporate citizen, albeit in recent years anyway.
OK, we're going to move on. We're also from Melbourne, so we'll ask you first, because this is, you know, in the Melbourne environment. A couple of things. Is a salary cap, in a sense, never going to work? Because, as Stephen just pointed out, is it possible that this has been done, is being done at other clubs?
Well, the salary cap is a fantastic idea in principle. The problem is, certainly looking at AFL clubs, and it's they've had for a similar amount of time, AFL clubs have had enormous difficulty with the salary cap. The worst case was Carlton back in between about 1999 and 2004, 2003. And whilst the Carlton figures were never released, it looks like it was about the same as what Melbourne Storm had. The only difference is the ARL have come down like a ton of bricks on Melbourne Storm, whereas Carlton lost draft picks but certainly weren't stripped of a premiership. They won the premiership in 95, and they never lost premiership points and never had a season destroyed. I think, I'm not a rugby league supporter, but if I was, I'd be somewhat surprised why the ARL would destroy the 2010 season for Melbourne Storm supporters when the crimes done by previous administration in previous years. Why damage the future? Why damage their brand, which is half owned by
because
News as well?
they say that this is very important as a way to keep the brand. But just on that, I mean, do you think this does irreparable damage to the whole future of rugby league in Melbourne? Very briefly, because we're nearly at the end of the program.
Certainly doesn't help it. Certainly doesn't help it. Whether it will survive, that's to be seen. But it won't be. It's struggled at the best of times in Melbourne, and this certainly won't do it many favours.
And what does it say about internal risk assessment?
It doesn't.
This really only came up because of a whistleblower, we understand.
It did, but I suspect, as Stephen said, if you look through the books of every single club, there's been about 10 AFL clubs who have had some sort of fine for salary cap breaches, some small, some large. Sydney Swans in 87 would double the salary cap. So it's certainly not an isolated event. Yeah, no, well, the fallout is going to keep happening. We do have to call it a day there. Thank you so much to my guests, Cynthia Kearns from Dow Jones, Adam Schwab from crikey.com.au, and in Melbourne, Stephen Mayne from the Mayne Report. Thank you so much for joining us. That is Business View. Stay on Sky News Business Channel for more.